let's be real for a second. We all enjoy the green candles when we look at these crypto and Bitcoin charts. This is Bitcoin on the daily, up around 10 to 11%. Look at this. Daily green candles. Go on crypto Twitter, crypto YouTube. The hype is there when we get moves like this. But I want to, for a minute, just for a couple minutes, I want to reel in the excitement and discuss truly, objectively, unemotionally what's going on in these markets. This is a marathon, especially these bear market formations. This is not a sprint. And while we watch these Bitcoin charts, I want to bring into play all of the data, macroeconomic data that says, hey, let's take a step back for a second. Let's be realistic and let's look objectively at what's going on. So we know what happened today. We have 6.5% for December CPI data came out. That is good. We're seeing this, I think it's 6 months now of just lower CPI data month after month. This is a huge pivot point for bear to bull. This is a huge pivot point. But I think now we're going to start kind of zooming out of inflation data and all that, interest rate data. We're going to start pivoting to a more important data point now as we go towards the end of this bear market, the pivot point of bear to bull, the pivot point of the economy turning around, the markets turning around. And what that is earnings. We have to focus on earnings, and I want to discuss why that's so important when we start looking at this Bitcoin chart. And before we look at that piece of data alone, I do want to break down the Bitcoin chart, what's happening right now. There's a huge warning on the screen as I do this video. Mind you, this is a weekly chart. There's 3 days, 9 hours left on the weekly. The 20-week moving average is a huge resistance area for Bitcoin. We have to see how Bitcoin closes this week above or below that area. And if it is above, how far above? What kind of separation is there? Now, the reason why this is such an important area is in bear markets, it's just an area where Bitcoin just fails to stay above. It's just this, it's like in this ocean, Bitcoin failing to just pop its head out for a breath of fresh air. And here we are once again testing this area. Now, when we're looking at that area, it becomes even more important as we start evaluating the bottom of this bear market, because right now, Bitcoin most recently breaking above the 786 line. Why are these two things so important? I discussed in a previous video not long ago. You go back to these previous bear cycle lows. Here's 2018 into the 2019 escape of the bear market. You can see Bitcoin, an explosive move above the 20-week and 786 kind of simultaneously. An explosive move of separation from those areas. That's really the move that we're looking for right now. We have not gotten that yet. Really, not even close. And we have a barrier in front of Bitcoin right now. Go back to 2015, similar type of story. An explosive move of separation to end the bear market, 20-week moving average in green, the 786. Back then, we even kind of got this revisit to the 786, which is a great move for more conservative, macro-minded people to get that support at the 786 before continuation back up. So that was kind of a confirmation for Bitcoin back then. So now we start going back to the Bitcoin charts right now with where we are, and we start seeing, okay, Bitcoin really not there yet. If we're looking at Bitcoin right now, barely any separation from the 786. A key move that we're above it right now in this weekly candle, but we're meeting resistance, and we have to be very careful. Macroeconomic things start playing into this bottoming formation for Bitcoin. I want to start here real quick. Just as a reminder, we've kind of been focusing on this headline type of data point. Investors may be surprised to learn that in the last 69 years on average, stocks did worse in the year before a recession began than during the recession itself. So 2023 being the recession. You're going to start seeing all of these headlines. 2023, recession is here probably. And the year before, data suggests markets performed worse. That would mean, and I want to start here because it's important, the 2022 year that we just went through for Bitcoin, for S&P 500, for equity markets, that was the worst of it. Now we're in this transition phase, and it's a multi-month phase. It's this marathon. It's not a sprint. And what does that look like for Bitcoin? Well, we've already seen this focus on CPI data, and we got to continue to watch that, of course. But now I think we're seeing a pivot point of where the focus will be, and it looks like it's going to be on earnings. Because now, as inflation starts coming back down, we're going to start seeing probably profit margins of all these huge companies kind of being affected in a negative way, right? So we might start seeing negative earnings report headlines, and this could drastically impact risk on assets like Bitcoin And this could be the setup for Bitcoin seeing resistance in this area and potentially one more leg down as the economy starts really feeling the blow from a company and corporation perspective. Fourth quarter earnings season begins in earnest this Friday with big banks reporting results and investors are bracing themselves for disappointment. So this Friday begins a big part of this narrative, of this story that we're discussing. That's after they were greeted Monday on a handful of retailers offering cautious outlooks. The forecasts are grim. S&P 500 companies may report the first decline in earnings since the third quarter of 2020. If this kind of narrative comes into play, this could be the kind of a one last cloud in this bear market for all markets, right? Equity markets, crypto. And if that were the case, it could be the setup for Bitcoin to see resistance at where it is right now and to kind of start maybe putting in even a higher low below the 786 line, maybe back down to 16,000 or even just a new low into the second range that I have here on this bear market formation. This could extend into Q1, Q2 if this were to happen. So we're watching all of these things and I'm trying to take into account for my own purposes macroeconomic data, which we're talking about, but also technical analysis data. So on this chart, the 20-week moving average, I want to see how this weekly closes because I definitely see a shift starting to happen in terms of a more bullish sentiment from a social perspective on crypto Twitter, crypto YouTube. People are kind of getting more bullish. People are getting used to just Bitcoin being under 20,000. I think they're even ready for a new low and they're comfortable with it if it happened. And all of these things starting to price its way into markets. But if Bitcoin were to break above the 20-week moving average, let's give it the benefit of the doubt. This weekly candle closes above. My question is, what happens here? Because remember, previous bear markets, we're looking for an explosive move, separation from the 20-week moving average and the 786 line. What happens here? This is a lower high Fibonacci retracement, meaning this last swing high that we had in October 2022 down to the swing low that we had in this bear market. We have this Fibonacci retracement, meaning Bitcoin kind of comes to the swing high, swing low, bounces back up above the 786 line and into this area, potentially, if we get a nice weekly close this week for Bitcoin, an explosive move of sorts. 786 line around 20,100, 618 line around 19,100. This could be an epic bull trap. If Bitcoin's approaching 20, even 19,000, 20,000, I can just see the headlines. I can see the excitement on crypto Twitter, the YouTube videos, and I know for myself, if that starts happening, I'm going to get excited. I like to see those green candles, but this could be an epic bull trap right now as we have all of this other macroeconomic data coming into play, because if those earnings start coming out as Bitcoin may be making a move to the upside, if it breaks the 20-week moving average resistance, we could start seeing that resistance really come into play and just bring Bitcoin back down. Huge bull trap. And these are the things. This is neither really bearish or bullish video, but these are the things that really we should be cautious of. And this is just the way that I see all of these markets playing out right now. This is speculative on my part. Obviously, nobody knows exactly what's going to happen next. And maybe Bitcoin doesn't test this area. Maybe Bitcoin doesn't even break above the 20-week moving average. Maybe it explodes through the area. I'm trying to speculate these scenarios so I'm prepared emotionally for these scenarios. And I'm also prepared to outlast the bear market formation, because just because we're getting green moves to the upside doesn't mean the bull market is confirmed. There are so many macro indicators that still need to happen, and Bitcoin's not even close to making those things happen. So let's take this one day at a time. It wasn't long ago, November to December, we saw 18% gains or so. Many people excited about that move. And look what happened, just a retracement. So right now we're getting 10 to 11% move. Will there be a retracement? Will there be continuation? Let's prepare emotionally. I think that's the best way. I mean, that's my best way to approach these markets. And right now, we'll just see what Bitcoin does, how it interacts on this weekly chart. Still 3 days, 9 hours, 20-week moving average resistance just above where Bitcoin is right now. Bitcoin already testing and seeing that resistance in between the 20-week moving average and the 786 line right around 17,300, which for context is only around a 4 to 5% move down for Bitcoin. So let me know your thoughts, everybody. How are you making out there? Are you watching all these markets? Are you bullish? Are you bearish? Are you almost bullish? Let me know. Hit the like, hit the subscribe. I'll see you in the next video. God bless.